Okay, well, the only thing that this market reminds me of is that dialogue which says, picture abhi baki hai mere dost, because it doesn't look like it's ending anytime soon. The Nifty is now down over 100 points and it's a very sharp slide. So let's do one thing. Let's take a bit of a breather from, tracking the markets minute by minute and get you some updates on what's happening with corporates. Maruti Suzuki's parent company, Suzuki Motors, raised stake in the company. They picked up 300 crore rupees worth of shares from the open market, and this got the stock a bit active. Of course, today the stock is under pressure, as is the market mood. But to discuss all of this and more, we're joined by Shashank Srivastava, who is the Senior Executive Director, Marketing and Sales at Maruti Suzuki. Mr. Srivastava, good morning, and always great to have you on the channel. First, on Suzuki hiking stake in Maruti, this is the second stake hike in the last 3 years. So just wanted to understand, it's clearly a positive move, but what prompted them to do so? And is there any indication of a further stake hike from their end anytime soon?
Sonia, this is a transaction done by our parent organization, Suzuki Motor Corporation. And actually, I do not know the details of these transactions. I may not be the best person to have a discussion on this topic. I really handle marketing and sales for Maruti Suzuki.
No, I do understand that, but I guess you're in a better place than us to give us, a little more details on it. So before we close this topic, is there any conversation about what target Suzuki would want to achieve in terms of a stake in Maruti, perhaps over the next 5 years? Anything that you can share with us?
Actually, no, I have no real details to share. Yeah, thank you.
Okay, got it. Let's talk a little bit about sales then. Post the sales in February, you had indicated that March production is likely to be lower than Feb. Is this issue, this production issue, is it something that's specific to Maruti? And when do you see a lot of these issues getting resolved, the supply side challenges, production, etc.? What do the next couple of months look like?
Yeah, so as we had announced when we had the discussion on the Q3 results, that we lost about 46,000 vehicles in production in Q3. And there was a loss of production in January and February as well, largely because of the semiconductor shortage. And in March, also we will be losing production in some of our models. And that loss is going to be higher than what we saw in January and February. So I think the problem has, although got better, it is still there. And for some models, it exists in a larger way. And that's the reason why in some of our models, we have quite a short supply, which has resulted in the long waiting periods. For example, the Ertiga or the XL6, the Grand Vitara, partly the Brezza, and so on.
So in March, more than 46,000, basically. Mr. Srivastava, good morning.
Q3, yeah. Good morning.
Okay. But despite this, right, industry inventory levels are rising. I think you highlighted this elsewhere.
Yes.
Yes. For the first time after some time, they've risen to 3 or 4 week highs. So what's going on at the demand level, Mr. Srivastava?
I think, and I keep saying this, it's a tale of two cities. So one city is where you have a shortfall in terms of production and availability, where you see longer waiting periods, very little of discounting or sales promotion, and some of the models I mentioned already, and this applies across most OEMs. The other cities where you have plenty of supply and which is witnessing a higher discount levels. And that is why what we see most manufacturers, they would try to push those models where the supply is in abundance. And that is also one of the reasons why the stock in the industry had built up from about 118,000 at the beginning of February to almost 220,000 by the end of February, which is a 3 weeks sort of stock. So I think that is the situation. The semiconductor supply issues now.
Mr. Srivastava, could you tell us what's the inventory level for Maruti? Are you primarily in City 1 or City 2?
So we are like our inventory level end of Feb was about 95,000 or so, which is still about 2.5 weeks of inventory.
Okay. So, Mr. Srivastava, looking into the start of the next financial year, the way things are playing out, higher interest rates, talk of, perhaps a global slowdown, talk of poor monsoons in India. I mean, all the macro news pieces are pretty negative. Do you see that playing through the sentiment? What's, let's say, the monthly run rate that you would realistically assume for the coming months as we step into the new year?
So if we talk of the current year, 22-23 financial year, I think the industry should end, the passenger vehicle industry should end at around 3.88 million. That would be roughly a growth of about 26% over last year's figure of 3.07 million. And in the next year, the projection so far is a 5 to 7% growth, and probably what we are looking at is an industry of 4.05 to 4.1 million. However, as you said, fresh news keeps coming in every day, and we do observe that there is a little bit of a slowdown in terms of the booking momentum, and also in the last week or so in terms of the inquiries. But
Mr. Srivastava, sorry, just to understand, you said 5 to 7% growth for FY24 at an industry-wide level, passenger vehicles.
Yes.
What would that projection be for Maruti for FY24?
So our projection for Maruti would be better than the industry. In other words, we should gain market share. That's because we have launched 3 vehicles during the course of the year in the fast-growing SUV segment, which was our weakness. So we do hope that our growth will be faster than the industry. And talking of the negatives, you did mention about the higher interest rates. There seems to be no pause in the repo rates as well, although it's possible that for some time you might see a pause. But inflation has been sticky. All this higher inflation leads to lower disposable income and actually it dampens the sentiment. So fundamentally, in terms of economics, whether it's the El Nino leading to lower agricultural output and therefore higher food inflation could be a possibility. But generally speaking, we have seen that in balance, I would say things are still positive because we do see the projection of the overall economic growth still around in that figure of 6 to 6.5%. If that is to be disturbed, or if something else happened on the geopolitical level, which pushes up commodity prices and the cost, or regulatory changes, etc., then you could see additional negatives in the overall scenario, in which case, of course, the equation and the projections will change.
Sure, got that. So for now, you're holding on to your 5 to 7% guidance for the industry. This is what you gave us last time as well. You're sticking with it, but you're saying that things could evolve and maybe you'd have to change that projection if things get worse with respect to El Nino and the monsoon. I take that point entirely. But just 2 quick questions, right? You mentioned also that there's a bit of slowdown in booking momentum and inquiries. Can you give us an idea of which segments are you seeing slowdown in? Is it only in the small car segment, or are you looking at it in SUVs as well, in UVs as well? And would this mean higher discounting as companies try to push their inventory amidst higher competition and a slowdown?
Actually, for this is some sort of a it's a kind of it's a situation which is unique, because when I say last week we saw a little slowdown in bookings as well as inquiries, they may not necessarily reflect in dampening of the wholesales or the retails, because that comes with a lag. The reason why it comes with a lag is because in many models, as we just mentioned, we still have pending bookings. So an inquiry level, a fresh inquiry drop or a fresh booking drop may not immediately reflect in a wholesale or the retail coming down, because you have consumers waiting with their bookings pending. So and definitely manufacturers would like to send them as many vehicles as possible. So you will see that effect of a slowdown in bookings and retail bookings and inquiries with a lag, and that lag could be between 30 to 40 days.
Okay, just one final question then. How many more launches can we expect from the Maruti stable, especially in the SUV segment, over the next 1 year?
Yes, so we have launched the Fronx and the Jimny. As you know, they are going good numbers. Fronx bookings 15,000, 23,000 bookings for the Jimny so far. So it's going good. Yes, we are looking at that segment very aggressively, as I pointed out last time we had this discussion. We intend to be number 1 SUV manufacturer in this financial year 23-24.
All right.
Going forward, our plan will be very aggressive, and you can expect a few more launches from Maruti Suzuki.
All right. Good luck to you, and we look forward to speaking about that more. Thank you very much, Mr. Srivastava. Appreciate you joining in and speaking with us here on CNBC TV18. Thank you.
Thank you.
110 points on the Nifty, 16,861 is where we find ourselves. Now, Data Patterns is the next company we're speaking with quickly. They raised 500 crores via a QIP issuance. Proceeds of this will be used for funding working capital requirements, investment in product development and debt repayments. To get details on this and more, we are now joined by the management, which is joining us. Mr. Rangarajan is CMD of Data Patterns. He's with us. Mr. Rangarajan, good morning. Good to have you with us here. Could you tell us the investors who came in, first of all? Any large, marquee, well-known ones who've subscribed to this QIP? And if you can sort of tell us about the use of this, as I preface my comments by saying it'll be a split of using for product development and debt repayment. But if you can provide specific numbers, sir, go on.
Yeah, I think most of our original investors stayed back and reinvested. Axis came up very largely. Then we had a Nippon showing a lot of interest. Tata AIA increased their stake. They put in a lot of money, bids, more than 60 crore, 100 crores they put in. So a number of large institutional investors as well as MFIs, put in bookings. And we're very happy to see that the original investors retained and continue to invest in the company. So this is where the investors are. Coming back to the second question, yes, we've raised money, but a little bit of debt repayment kind of thing. But more importantly, the large portion of the fund we expect to spend on product development. We want to now scale the company now that we've gone public. Earlier years, we were actually, development is funded internally from the resources which you could generate. And we can incrementally do development on products. But the market situation has changed now. India has opened out to Indian industry largely. And the size of business here, opportunities are so huge. It's necessary to address that with more products. The idea was raising funds is that we already have a whole lot of development done, products done, a lot of building blocks done in various areas we have specialized in, which we are leaders in the market in the area. We want to focus on those areas, develop products in competition with foreign vendors, and see if we can address the market with those kind of products. The idea is to try to increase...
Mr. Rangarajan, sorry, just for paucity of time, can you give us some numbers? These new products that you're looking to invest into, what kind of revenue potential would you have? What are you targeting in terms of growth from these new products or these fresh products that you just alluded to?
Yeah. See, we are looking to increase our total addressable market to 30 to 40,000 crores from where we are today, 3,000, 4,000 crores. So we need to 10 times look at the size of market increase. We are specifically investing in areas of building our own satellites. 3 months back, we launched a satellite for a startup company. The satellite as well, we handed over the satellite to them, fully designed by us. So interest is to try to build our own satellites. This is one area where we want to invest money. Second area is a lot of opportunities coming in the radar. We do every part of the radar in India designed by us. So we want to look at positioning our radars for the MOD business. Third is in electronic warfare. And fourth is in communication. All of the areas, we have a whole lot of already developed technologies and products and subsystems. The idea is to reassign these products for the end applications which we're looking at, which will give us a very low cost of development vis-a-vis starting from scratch. So that's what we want to do, and this will actually give the addressable market increase substantially for us.
Sure. Mr. Rangarajan, just a word. I mean, you gave very bullish guidance, I think, at the start of the year as well, where you're talking about a revenue growth of over 40%. Do you still see that, as your base case? And also, are you confident of sustaining your margins at this 42% sort of a level?
At the present, yes. We continue to grow at 40%. The good thing is that we have more than 1,050, 1,100 crores orders on hand. We also are looking at some 2,000 to 3,000 crores single vendor orders on expect in the next 2 to 3 years based on previously delivered products. So we have an order book visibility for 2 to 3 years time. And I thought this is the right time to start investing in future in the middle term to get the products in to scale the company times. So this is what we want to do. Coming to the second question on the margins, since all the products are designed in-house, we work on a raw material cost rather than buy and integrate. So margins typically are higher. But that's more because of the amount of product development which we've done earlier days, which is written off, which is not really visible in the books, which is really giving us the margin. Yes, we will continue to, in the coming year, we continue to retain guidance the way we have done last few years. We will grow at 40% more is what we think. And also we retain the guidance of 40% EBITDA, we're thinking.
So you said, if I'm not wrong, just correct me, you said that you're looking to increase your addressable market by 10 times, right? Currently it's 3,000 crores, you're looking to get it to 30,000 crores. That is quite an aggressive, ambition that you have. Yeah.
Yeah, see, what happened is India is now looking inwards in the defense business. They're used to importing products and integrating in India. And this is a time when India is saying, okay, now look inwards. So the opportunities are very, very large. There are two ways you can address the opportunity. One, to tie up with foreign OEMs and build the products here, because we need to have products. And there's a requirement that 50-60% of value addition is done in India for whatever we get into the market. So the second version is try to build systems ourselves. We are trying to follow the second alternative, try to build based on competency to be competitive with to foreigners. The opportunities are large, and this is the time we have to address opportunities of building the products.
Got that, Mr. Rangarajan. Thank you very much for joining in and giving us some highlights on the business. And with that, we're at 10 o'clock and we're back to the market. The market is not looking any better. We are practically down to the lowest levels that we saw back in October of 22. In fact, the low from where the market turned and started rallying was on the 30th of September. That level was just around 16,750. We're not too far away from those sort of levels as we speak. It's just been a slide all the way. Let's bring in our technical experts again. Mitesh is back with us. Mitesh, how do you negotiate this now? Any trades, or would you sit out for a while? What would the advice be?
So on the index, unfortunately, we didn't take a trade. We kind of closed them yesterday, and hoping that the decline will get arrested around 17,000 levels. But the next level we were watching was around 16,800. You just highlighted that we got a low way back in September, October of 22. I think that's the pivot point to watch out at. And also is the fact that there's a gap over there, which was created in July of 22. So this level becomes very important. Therefore, I think on the index, while the structure is weak, the idea remains, if you get a rally, sell it out. Otherwise, if you've been out of the markets, then wait out for a bounce back to come into play. But on the stock side, I've got two trades. Titan is on the buy side, while Siemens is on the sell side. So Titan, I think, is reversing in a negative scenario. It's also getting past its 200 average and good price volume action here. I recommend a buy here with a stop at 24.20 for targets of 25.30 on the upside. And Siemens, I think, after a good rally, seems to be getting into a corrective mode. So keep a stop just above 32.60. Look for targets of around 31.50 here.
Thanks a lot for joining in, Mitesh, and giving us those ideas. By the way, we need to take a short break very quickly. On the other side, we'll have Manisha Gupta joining in to shift focus on the commodity markets, the big fall we've seen in crude, and lots more coming up. Stay tuned. Well, there's no beating the market blues. It's still down about 100-odd points for the equity markets. But let's find out whether it's the same situation in the commodity space or not. Manisha Gupta is joining in. Manisha, is it as bad there? And what's the commodity that you're looking at today?
Well, really bad. And I don't want to look at this market anymore for a few days. But yes, I'm looking at the crude oil prices and another 5% of a decline. So after 3 days of decline, today has seen some bit of a buying. But you wouldn't want to read too much into this. We have seen the Brent prices decline from 88 of a high to 74 of a low on your screens. We've actually seen a low of 73.5 as well, but from there some buying coming in. So 5% of decline in the overnight markets, and when you look at this week, rather last 3 trading sessions, we've seen 11% of decline for Brent and 12.5% of decline for the WTI prices also. And with that fall, we're trading at the lowest in 15 months for the crude oil prices there. What we also do understand is that many people were long because there was this whole conversation about Russia sanction impact and the Chinese demand coming back. So many of those hedge funds right now are liquidating their longs, is the reason you are looking at 3 to 4 to 5%. Just go in matter of minutes there. Also, the crisis in banking sector could trigger cut in demand. That's yet another concern. While we still are awaiting most of the global banks and brokerages to come out with their new forecast for the crude prices with the kind of decline that we have seen. The dollar index after that initial decline also has started to gain up. So that's weighing onto the markets too. And then the rising interest rates, economic uncertainty, the risk of sentiment that we are seeing in other currencies, global equities also seems to be weighing onto the markets there. The only one thing that you would want to still watch out for the next quarter or the second half of this year is that IEA and OPEC all seem to be telling you that the Chinese demand, once it comes back, there could be tightness going forward in the second half, and that could still take the crude oil prices to $90 to $95 as well, from 75 of a current level there. But take a look at the range on what we have seen in sense of crude prices in the last year and this year as well. So it was nearly $60 of a range last year between 130 to 75. And this year, in the first 2 months, including March as well, we've done a high of 88 and a low of 73.5. So 15-month lows and 2023 lows as well coming in on your screens.
All right, Manisha, thank you very much for that. Well, 113 points lower. We are at 16,857. So far, I mean, if you're waiting for a bounce, it's elusive. It's proving to be elusive. Bank Nifty is still down about 1% as well. Let's refocus on Titan, which is actually beating the overall downtrend. It's up about 2.5%. Mangalam is back with us. Mangalam.
Titan is at the high point of today's trading session, and that's perhaps on the possibility that now the street will start looking at their eye care business as a separate valuation driver, primarily because of the big announcement that came this morning, fundraising for Lenskart, $500 million invested by ADIA at a valuation of $4.2 billion. Just looking at Lenskart's metrics, FY22, their revenues grew by around 66% to 1,500 crores with a loss of 102 crores. How does that compare with Titan's business? The eye care business in the first 9 months of this year did revenues of 524 crores and an EBIT of 96 odd crores. Assuming 2,000 crore revenue for Lenskart in FY23, this deal values them at around 17 times price to sales. If Titan, they've guided for 750 crore sales in FY23, if they go ahead and do 1,000 crores worth sales in FY24 with an EBIT of 120 odd crores and not using the high metrics but a lot more conservative numbers, 6 to 12 times price to sales multiples, this business could be worth anywhere between 6,000 to 12,000 odd crores. And this, remember, analysts haven't estimated in their sum of the parts valuation for Titan so far. So could this be a case for analysts to look at their eye care business as a valuation driver?
Okay, got that, Mangalam. Thanks very much. That's some green in an otherwise deeply red market. Vivek, so you're looking at this block deal. It's finally happened with Samvardhana. Tell us the details.
Well, that's right. So Motherson, is the stock in focus, 3.7% equity, significant supply coming in today's trading session. It happened in the block deal window. And, what's actually happened is that as per the term sheet that we saw, Sumitomo Wiring Systems, Japanese entity, part of the promoter group, has sole stake in the company. And, the floor price for this particular block was at a significant discount. So 69.9 rupees per share was the floor price, almost $195 million worth of, block has exchanged hands. And now the worry is that, given the fact that they held almost 17.5% stake at the end of the December quarter and just around, 3.5% equity is gone. Now, what do they do with the remaining 14%? At this point of time, there's a commitment that for the next 180 days, they won't sell further. But, the overhang remains as to, what exactly is the Japanese promoter going to do with the remainder of their stake in this particular company.
All right, Vivek, thank you very much for that. We'll take a very quick break here with news that we still have a 100-point cut on the Nifty. Lata will join us on the other side. She'll have DK Joshi and Hetal Gandhi of CRISIL to put the focus on the India growth story and their F524 outlook amidst all of this global volatility and uncertainty. Stay with us. That conversation comes up next.